always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks. I'm saving up my dough, watching it grow. No more wasting money on things I don't really know. Financial smarts, that's my new swag. Investing wisely, no more burning cash, I'm building wealth. $1 at a time, going from broke to living the life that's prime.
What's good, everybody? It's your boy Reckless Ray De Niro, and we are talking today about a few key things. This is a special episode. I made this episode specifically for a buddy of mine who was saying, talking about how, and actually, you know what? A lot of people are probably still thinking this because it's still early. I have to constantly remind myself that we're still in a very early adoption phase in regards to where things are going with cryptocurrency, specifically Bitcoin, which is one of the future financial strategies. So I'm going to bring back part of an episode of just some back to basics. We're just going to go and I'm going to do a quick synopsis, and it's going to be quick. It's going to be the first 5-10 minutes of this video. Quick. About how to get involved, start acquiring a little bit of Bitcoin. And it's going to be super simple. It's going to be actually a strategy that I'm still using. Bitcoin specifically is one of our future financial strategies. It is the best performing asset, period, over the last 15 years since its inception. The only thing that's performing better is in this small window of time. Got to give a shout out to Colonel Neil. Right now, NVIDIA is beating Bitcoin during this specific window of time. Now, is NVIDIA going to continue to outperform Bitcoin over the next 15 years? Me personally, I don't think so. Me personally, I don't understand how if over 3x of the circulating supply that's being produced for us to have access to is being purchased weekly and daily. They're buying more Bitcoin than is being produced every single day by an order of magnitude. Every single day. We get the weekly reports, and it's so insanely over what was produced that week that it almost makes you wonder where the Bitcoin's coming from, because it's got to be coming from somewhere. Now, I know that there are definitely some people out there in the space that are looking at this as an opportune time. Every time we touch 70, people start selling off and buying things. And I get it. That's how people are. That's what we do. But I don't think that many people are selling off to justify the price not going up when so much more than what's coming into the market is being purchased every single day, more or less. So during this time window, and this happens at the beginning of every bull run, there's a lot of price suppression because all the rich people want to be able to get in for the best price possible. And I always say, follow them, follow the money. But as far as NVIDIA goes, are countries buying NVIDIA stock? No. Are countries transacting in NVIDIA stock? No. Do I own NVIDIA stock? Yes, I got some. That doesn't mean that we pass up bags, but again, when your time window and your time horizons are in 5-10 plus years, NVIDIA beating Bitcoin 1 month, I'm like, well, the last 14 years of months, it hasn't. That's a lot of data. Do I think it's going to do it for the next 15 years? Absolutely not. Do I think it's a great play and a great stock to hold if you are in traditional finance space? Me personally, I hold it. I think it's pretty good. It's going to be even more good when the split happens, because then some people who might not be able to buy in at $1,000 can get in, or can multiple hundreds of dollars. We'll see where it's sitting. But the point of the matter is, the reason Bitcoin falls under a future financial strategy is because it is the bleeding edge of it, the bleeding edge, and where I believe the financial puck is going. We want to get ahead of the game. You don't want to be coming into the game late. You don't want to be playing with the scraps. You want to be ahead of the game. So that's what we're going to talk about today. But before we get into these conversations that we're going to have, we're going to talk about the sponsors of the show. First and foremost, we want to give a shout out to Delta Investment Tracker app. Really, really dope app. Really good to use. They now have a desktop app, which I love. As much as I love my phone, I do like plugging in data on a laptop or a desktop because it's easier. It's better screen. Generally speaking, you get more full features, with the exception of one thing that we're gonna see as we see these products that are phone first. You'll see that they actually perform worse on desktops. So it's what it is. Part of the game. But they're a sponsor of the show. How are they a sponsor of the show? They have granted me a sponsorship via allowing me to have access to the full featured Delta Pro app so I can go in, track, see, get some insights and data on the moves that I've made within my portfolios, and insights into the market, live updates, a really great news feed that gives me news about the positions that I am holding. It's very useful all around. Can't say enough good stuff about it. We love it over here. Shout outs to Delta. Secondly, shout outs to Circa 84. If you're ready to take your investments to the next level and tap in with a group of individuals that are having some discussions that may not be public knowledge, that may be some behind the scenes that get into the weeds more so than we can for videos that are put in for the masses. I am over there. I am a moderator in the cryptocurrency section. We also have real estate wholesaling. There's real estate conversations, stock conversations. We got options trading, futures trading, all kinds of trading going on in there. I'm also going to start talking about financial strategy within your brokerage accounts. We're going to be talking about some dividend investing, different investment styles. We're turning up over in Circa 84. So shout outs to them. Okay, so let's jump into this. So I've done this video. I will link the original video that I did because I've done multiple videos on easy onboarding for Bitcoin. I did a video specific, but this one I'm going to go with the easiest method and the method that I currently personally use. So I'm not going to tell you guys to do something easy that I'm not doing, because if it's that easy, why wouldn't old Reckless Ray Dinero do it? Wouldn't make any sense. So we're going to jump in. I'm going to go ahead and pull this screen up here. Now, this is a little peek behind the scenes. It's in my Cash App. We got that sitting here. Now, what you'll have on your phone, because that's how we buy Bitcoin. It's the easiest way to get it. It's just to get Cash App. I love Cash App. Another option that I don't use, but would also advocate for now, is PayPal. PayPal is also good. I received some settlement funds over there in crypto from the Celsius settlement. We finally got our crypto back, some of it. And, PayPal allows you to send out of the platform now. You can send it to your crypto wallet. So they're good in my book. But Cash App is bread and butter. I love it. They have a bunch of full featured tools. If you're just starting out on your financial journey, the reason I prefer this over any other avenue is it has so many things that if you're just starting out, you can live in this ecosystem for the first few years exclusively of your financial journey. Because what do they have in here? We've got the cash, obviously, spend card, great. They've got savings. Now they have, I think it's like 4.5% APY now if you have a direct deposits of over, I think it's $250 a month, something of the like. They tell you in the fine print. Also, direct depositing into your Cash App gets you your direct deposits a day or two early. Yeah. Also super convenient. Quicker access to your money. They also have stocks. You can buy your stocks in here. Now, it's only fractional shares. Is it a full full-fledged brokerage? Absolutely not. It does not offer the benefits of a full-fledged brokerage. But if you're just starting out, as you're stacking money up, you can build up within these stocks. Because like I said, obviously we save in the market. We've got our spending cash out here a little bit, which is only for work. That's what this budget is for. We have the stocks over here. Everything that spills over out of my set amount that I have for what I'm going to spend during my work weeks gets rolled over into stocks, because we save in stocks, obviously, when you guys donate to the platform. Those of you who, shout outs to Beak, those of you who donate over Cash App, I always place it in stocks. That's saved in stocks as well. And then most importantly, you've got your Bitcoin here. Obviously, we're down 1.64% today. Definitely just had a pretty high dip. Actually, it wasn't even a pretty high dip. It was just a dip. But the YouTube ecosystem, they started immediately talking about it as soon as it started happening. You saw FUD videos coming up that Bitcoin's over, it's the end of the world, clickbait, and all sorts of fun stuff. We won't be participating. But this Bitcoin tile is the one that's most important. Now, when you first set up your Cash App, get your stuff set up. I know the stock tile is openly available. The Bitcoin tile is also openly available, but you have to do a little bit of additional KYC to finish that out, and then you can send and receive Bitcoin. I buy all my Bitcoin over on Cash App now. It's just easier to get into the market. Just buy it here, send it to your wallet, convert it over to whatever I need it to be, keep it pushing. I don't use centralized exchanges anymore. If I can't do it within the DeFi space, I pass on those opportunities happily. Just doesn't align with how I've chosen to navigate. But it's super simple. You just put cash in here, go in, buy yourself some Bitcoin. If you're not sending it anywhere, really, it's not even that big of a deal. If you're just going to buy Bitcoin, which I am, if you're new to the space, that's get the guaranteed win, people. It's the easiest thing to do. It should be part of everyone's financial plan at this point, especially if you're listening to this channel, and you're in the wolf pack. This should be a piece at minimum. Now, one of the things that they'll say is, oh, well, I thought you've been doing Bitcoin for a decade. Why is there only $6,800 in your Cash App? Well, I don't believe, unless you're actively planning on using it, dumping all of your Bitcoin on an exchange and keeping it in a centralized entity. I am an advocate for self-custody. But if I was going to leave some Bitcoin sitting around somewhere, it would be on Cash App is fine. If I was going to leave it on a centralized entity, I feel like Cash App has less of a chance of going away than Coinbase or anything that's just solely a crypto exchange. Cash App's got a lot of stuff going for it. And yeah, it's just one of those things. Another benefit of Cash App is Cash App has a bunch of different cash back options, and Bitcoin is one of them, and I use it all the time. That's the only one that I have on my Cash App is the Bitcoin Cash App. So when I go grab an extra drink, grab some chips, a slice of pizza, whatever I get for lunch when I'm at work throughout the workday, it rounds it up to the nearest whole dollar and puts it and goes and buys a little bit of Bitcoin every week. So I've constantly got a little drip of Bitcoin going in here anyways. But the reason I have this over here is this is the part of it that's sitting is for, well, at this point, since we had a little spill and some injury and some surgery, this is now going to be going towards home improvements. So I'll be improving the primary property that I'm in that we're currently house hacking. Another one of the future financial strategies that we utilize. We're going to be doing some upgrades, going to be doing some value add stuff, do a couple little projects. I got a big fix it and a couple of medium/little fix its. And then we're going to start in on the interior section by section remodels, which we will be doing videos on that. And the reason I'm going to do it in small sections is because I want it to be make sure it gets done. But B, the things that I'm seeing within the market and how some of these subcontractors are functioning, I don't want to be all in on a project with a contractor and then have the prices changing. So I just rather do it a piece at a time, do them a weekend job at a time, because nothing around here is super duper large. It's not a luxury home. It's going to be, but I do have some creature comforts and some upgrades that I want to do to make it nicer. We got a curb appeal project that I'll be doing myself. I've already done a bunch of the projects within the home myself, but the stuff that I can't do, or the stuff that it's not going to be worth my time to do per se, I'm going to go ahead and hash that out to a contractor, because if they can do it faster and more efficiently, we'll pay for the efficiency, get it done. So that way, when it's time to start looking at the first position HELOC and, doing some of the other financial strategies that we want on this property, when we get that appraisal done, it will be to our benefit. It's going to be to our benefit either way, but we want to maximize that appraisal. So I've got that Bitcoin sitting in here because it's appreciating value actively. And yeah, we're gonna keep on keeping on with that. Now, I think that's going to sum this up. So, I mean, literally the easy breakdown, and I'll put the video that I did on Bitcoin period. I've done a multiple conversations, multiple videos, multiple live streams on the value proposition of Bitcoin. It's not a question at this point. It's been 15 years. It's outperformed everything. There's no questions. Countries are buying it. Governments are buying it. Wisconsin's using it to save their pension funds. It's kind of a question of whether you're getting on board or you're not. But as far as how to get into Bitcoin easy, use Cash App. Now, the phone app has access to all the tiles. This is one app that was made to be used in your phone, because you don't even have access to the stocks or the Bitcoin on here. I've looked around on the web version of it. Not good. But yeah. Okay. So we're moving on to the next video. We're gonna do a breakdown. Now, I've watched the first quarter of this, but I wanna listen to it. We're gonna go over it. I'm gonna pull it up. We're gonna share this tab now. This came out on May 14th. Shout out to KTSM 9 News. They talked to an economist about why Gen Z has it worse. Now, there's been a lot of controversy. There's a lot of conversation on whether it's a mindset thing, what's actually going on. Those young whippersnappers don't want to work hard. And as somebody who works hard, I can kind of see that. But like, also on the flip side, the environment that they're coming into, they're literally running into a financial hellscape, if you would, that they didn't create, that they now have to exist in. So there's conversations on both sides, but I'm gonna take a look, and we're gonna mine this out. We're gonna see what Gen Z is going into from the perspective of this economist. So let's take a look and see what we got going on.
In the newscast, we told you about the new generation of graduates and their struggle to enter the job force. Now, according to a recent study from TransUnion Credit Reporting Agency, Gen Z is making less money and seeing more debt than millennials.
We're joined this morning by Dr. Tom Fullerton. He's an economics professor from UTEP. Good morning, Professor. Thank you so much for joining us. So first question is, why is Gen Z in such a worse financial situation, even comparing to millennials?
You know, it kind of depends on how you slice it. The truth is that right now the economy overall is doing good, but interest rates are high. So anybody that's got credit card debt is going to be in trouble because those credit card rates have been going up also. Real estate is priced very high and compared to incomes, and so it's hard to buy a house. Rent has gone up substantially as well. food prices are up and restaurant prices are up. Well, all of those things hit, let's see, young people particularly strongly. And so let's see, right now the headlines, even though the economy is basically in good shape, a lot of the headline numbers are affecting these key groups. And that's one reason the polls show consumer sentiment in a lot of areas as being decidedly negative.
A lot of Gen Z came of age, started moving out, really started taking.
Okay, so we're going to stop right there. There's a couple of things I want to touch on. This is one of the weirdest things ever. So most of the economists that these people bring up, and even economists that I've met in my real life, they're broke. So they can pontificate on the system. They can talk about the system. And it's not that I don't agree with this man. It's just something that I've run into a lot. That these, the economists are broke. So you are supposed to have a deep dive in the system, and you haven't used any of that information to better your situation. It's almost like one of those age-old questions. If you're so smart, then how are you broke? If you're that smart, and specifically when it comes to economics, because that's money. So understanding the system, supposedly understanding how money works at a very high level, they're somehow they end up broke. Either that or this man is secretly wealthy and he just hides it well, which could also be a case, but I've never met a rich economist. None of my clients, none of my multi-million-dollar clients are economists. It's just real interesting to me. But the things that he said, interest rates are up 100%. Real estate is up 100%. Rent is up 100%. Food is up 100%. I can't argue any of those things. In regards to the interest rate, though, it comes down to a conversation of how are you utilizing debt. Now, most of Gen Z is brought up. They're a microwave generation. They want everything super fast. So they're buying things on debt. They're not able to buy homes because now you've got to qualify at a much higher level to buy a home, which they're also not doing because their pay is less. Now, apparently. Well, it's not even apparently. It's nobody's getting raises. That's not even a conversation because I understand that too. Nobody's getting raises. Raises are coming few and far between. You got to fight for it if you're not willing to go in there tooth and nail and advocate for yourself to get that raise from that job. Then you're probably not getting it. In most cases, if you're a good employee and you're not doing that, it's because you're doing something else to not show up at that place anymore. That's generally the way that I tend to go. I am not a big self-advocate. If I need money, I'll go get the money. And then I'll continue to go get the money until it makes no sense for me to show up where I'm showing up at. And, then we're parting ways. It's too late now. You can't afford me anymore. I'll make it so you can't afford me. But on that same note, when you look at these people in Gen Z, they're all living off TikTok. They're living off these fake assessments on what they should have, what they should be doing, how other people are living. If you're a Gen Z and you're highly influenced and you don't have critical thinking skills because they stopped teaching that in school as part of the curriculum, then you're just believing that everybody else who's your age just is getting the bag and they're all rich already. And most of these people are lying to you. So then you go out, take out a bunch of consumer debt, don't use it the way we do over here in Future Financial Strategies and in the Wolf Pack to acquire assets. You use it to acquire the things that you saw on TikTok that these people who are pretending are flexing in your face, and you believe that they had it when most of those people are also broke. And in regards to food and everything else, it's just everything's more expensive. You're in a financial system where they are now actively trying to make sure that you are stuck being a renter forever. No other generation has had to do that. It's almost like you're either going to make the concerted effort to be a property owner and have that be a part of your financial strategy moving forward, because the reality of the situation is most self-made millionaires leverage property. They leverage their property. They have a piece of property that they can tap into for additional income when needed. They have an asset of last resort when needed. That's going to get taken. That's being taken away actively, because some millennials will have experienced this. Me personally, I did not. I bought when I went and decided it was time for me to no longer rent, the first place that I went and looked at was the place that I ended up buying. I made a contingency plan, but I bought the first place I looked at. I went, looked at it, was like, cool, this is what I want to do. It was at the beginning of the pandemic, before all the corporations were full bore. I wasn't competing with BlackRock. That wasn't a concern. There were plenty of stock in the housing market. Granted, stuff was selling over value, but for me personally, obviously, I'll say I got lucky. Luck being when preparation meets opportunity. I didn't have those problems. I was ready to buy. I was also willing to negotiate. I negotiated the price on my property way down, especially after the appraisal came in. But I wasn't in the market where places where I was bidding against BlackRock, because like nobody knew exactly what we were going to be doing. And it was like a month after I got my place, all hell broke loose. The market completely changed. Like, I've refinanced this house twice before rates went up. My rate right now on it is 3.25. 2 refinances and the property value went up so much. And I didn't finance it to pull cash out. I refinanced it to lower the monthly payment. Reason being, me personally, being a house hacker, I wanted to free up more cash flow and make sure that if something were to happen and I was fully loaded on this by myself, it would be very easy for me to go out, and I wouldn't necessarily need a job. I could go fund this with gig economy money. Like, I can go out and Uber and get this money to pay for this mortgage all by myself, 4 days a week. Like, I already run the numbers. Like, it's a contingency to the contingency, which allowed me to supercharge my focus on investing and acquiring cash flow. We secured the wealth end, and then we've been steadily increasing and building cash flow. Now we're full bore on building cash flow, and we're looking at having it be a work optional situation where I don't have to show up anywhere I don't want to within the next 4 to 5 years. But that's with intent. I'm not just starting out in the job market. I was also in a career that I was in for over a decade that I've mastered. I'm good at something. I'm also in a trade. COVID was having everybody go home. I didn't have to go home. We never stopped working. Matter of fact, our wages went up. We got multiple raises. Now we're in a space where you got to substantiate those raises. That's what we're doing. So in regards to his first point, all of those things are true. And coming into those circumstances, both internally and externally, you have to be a really solid person who has a laser focus on what your goals are. And, at that age, I can't say that I did, so I can't say that I don't understand that point. Let's go ahead and jump into this next one. We're going to bring this back a little bit. See what else you got.
Came of age, started moving out, really started taking on adult responsibilities during COVID, which was not exactly a cheap time to live either. And we're seeing a lot of this because of that now. Mm-hmm. Do you think people are underestimating how much COVID had an impact on their credit and their debt so far?
Well, let's see. For a while there, they were protected by all of the federal safety nets. But now what they're really conscious about is that prices have leveled off, but they have not declined. And they remember, a lot of consumers remember, or they've mythologized what existed prior to 2020. And so they remember 2019. 2019 was the golden age in terms of pricing and in terms of interest rates. And so, those two things have caused a lot of consumers, and from a political perspective, voters, to become very unhappy about where things are now.
Mm-hmm. And do you have maybe any advice for young
Mm.
people, entering the workforce or getting their credit cards out or anything? I know it's hard to predict at this point, but is there a bright light at the end of the tunnel for Gen Z as far as, finances go?
Well, right now, let's see, the job market is still very strong, and there's still a lot of good opportunities out there in the labor market. Things may be slowing down a little bit, so it'd be a good idea to be adaptable. Maybe you're not going to get exactly the job you wanted, or maybe you're not going to get a signing bonus, but there are still good job prospects out there. And then the other thing is to live within your means. Don't pile up credit card debt. 25% interest rates on several $1,000s of credit card debt, that adds up very quickly, and that's money that you should be spending on other things that are necessary for or useful to you.
All right, Dr.
That's some good
Fulton.
advice.
Yeah, that's awesome. Thank you so much for waking up early this morning and giving us even just a little bit of hope. We needed that this morning. Hey, don't go anywhere. We have so much more coming up right after the break.
Okay, we're gonna go ahead and drop that down. I'm gonna give my synopsis on this. While it's not your fault, Gen Z, for the circumstances and the hellscape that you're coming into, it is going to be your responsibility on how you proceed forward. Now, there's two roads. You can sit here and believe every bit of the propaganda, and actually it's not even propaganda. You can believe people's excuses that it's not your fault and just be upset and stop there. And then you're likely going to be broke indefinitely. You'll be poor forever. You'll be at the bottom of the system. You will be one of the peasant classes. You will be a renter. You will be hand to mouth. You will be at the behest of the landlords, the owner class, whoever you want to, your metaphorical them who made some decisions that you did not make, or had some opportunities based on the privilege of them being born into a different class than yourself that you did not have. And you will look at them and you'll be mad and you will work hard and you will be spiteful. You will be bitter. You will be jaded until you die. Or you can take the other path, and that's adapt to the environment that we're in. Doesn't make it right, doesn't make it fair, but life is not right or fair for anything on this planet. You are still currently now, if y'all keep advocating for this free stuff, this might not be applicable in the next couple of years. But currently, you are in a system to where you are not locked in to the financial socioeconomic class you are born. You are not locked into the circumstances financially that you were born into. So you can still make some informed decisions and adapt. You can tap in over here at Future Financial Strategies. While I might be a little bit ahead of some of you, I'm not out of the race yet. I'm still digging. I'm still climbing. I might only be knee deep while you're neck deep. But I'm getting out and I'm showing you how I'm working my way out of this quicksand that they got us in, because I was in it too. I didn't come from money. I haven't had any help. Apparently, 42% of y'all that are considering calling yourselves homeowners and using that as a flex, your parents helped you buy it. I had no help. I bought this place myself. I set this situation up myself. I curated this financial structure, this financial whatever it is that I've made myself. Every dime was on me. All the signing was on me. I had to go to the bank and ask for money as an individual to buy this property. I had to make some informed decisions. I had to make some informed sacrifices. Now, that was back in 2019. Those same sacrifices just getting into the game, because now I own a home. So when I'm ready to move out, I can throw out some contracts on this. Now this becomes an official asset. So I can go get another one. the sacrifices that you might have to make, Gen Z, is going to be different. But that doesn't mean you shouldn't do it, because existing at the bottom of the system and not having any say-so in your financial direction, having to have a job that you hate because you don't have any other means of generating income, having to work grueling hours to feel like you're still broke, to not have anything building, to see no forward momentum year after year. You're just doing the same grind over and over again to be in the same spot. That's a sacrifice as well. You're sacrificing everything else for some short-term whatever it is while complaining. So you could just go do the work. I mean, in order to get this house, I had to work a whole lot of hours. I worked hours at my job. Then I got off my job. I had to Uber. I started Ubering before I was going into work and after I was going into work. I was living a Uber sandwich because I had to go pick up a side hustle to generate some more income to get my finances right. And I also carried that through to supercharge the initial investments that I made in the crypto space after I got the house for a little bit. And then once I got to a point to where I could purchase more income versus having to go physically get it, now we're in that realm. But the option to go ahead and get out there and get back in that car and start driving people around is still there. Still could come back. Still could be something that I do because I've got lofty goals. Like trying to get to work optional in 4 years is a lofty goal. And I don't want to have to solely rely on crypto to do that. Matter of fact, we're trying to set it up so I don't have to touch the crypto to do that. So we're building out the portfolio. Tap in. We do a special episode first Monday of every month. We do a portfolio update on the dividend income focused portfolio that I'm building out. But there's levels. And level 1 is you just got to put your nose to the gridiron and work hard. That's the answer. There's no shortcut. There's no side door in. And generally speaking, if you do happen to find a shortcut or a side door in, you won't keep what you get. Just look at all the people who rode the Shiba Inu wave and thought they was rich and then refused to sell because they didn't understand how the market worked. And then lost everything that they made. There are no shortcuts. The work must be done. Okay, moving on to the next topic. We're going to talk about the United States phantom debt issue. Now this is from Bloomberg. What's it say? And I'm going to give you the synopsis. So it says that Americans are racking up phantom debt that Wall Street can't track. Consumers have embraced the buy now, pay later products that allow them to pay for purchases in installments, but it's not clear how many of these loans are out there. Think about that. Again, we're going back to everybody wants everything now. Everybody wants everything microwaved. And now we're in a space to where, because this won't hit your credit, at least not right now, these loans don't hit your credit. So this is another way that you can hypothetically, if you're not financially intelligent, if you're not responsible, can dig an even deeper hole, because you can max out all your cards and then get buy now, pay later and continue to rack up debt that way. This could be dangerous for some of y'all. So I've got 3 points summarizing this article. I will have this article down in the video for those of you who want to go check it out for yourself. But first point, popularity and usage of buy now, pay later services. Buy now, pay later services have surged in popularity, especially amidst persistent inflation. Americans are increasingly using these services to purchase essentials, including groceries. Major buy now, pay later providers like Affirm Holdings Incorporated, Klarna Bank AB, and Block Inc.'s Afterpay offer consumers the ability to split their purchases into manageable installments, presenting an alternative to traditional credit. This is going to be dangerous, people. If you're down to the point to where you're buying groceries on buy now, pay later, you are in a hole. There is definitively something going wrong with your finances if you are doing that, unless somehow you are so forward thinking that you're literally putting everything on installments so that you can buy all the assets up. And there's something back in that. So that way, if something goes wrong, you can play it because you can pay that back. Because if you don't pay within those installments, you're paying more than credit card numbers to facilitate that loan. It's the same with the Cash App play that we use as a future financial strategy. They charge you a flat 6%, but if you don't pay them back, that rate skyrockets. You're playing over credit card numbers if you do not pay it back within the window of time that they give you to pay it back for the flat 6%. Using debt, period. It's a leverage tool. Debt is a tool. If you are using it to buy things that you consume, you can't even sell off the stuff that you bought generally to pay the debt back. Problematic. Moving on to point number 2. There is a significant concern with buy now, pay later services that they do not report these loans to credit agencies. Unlike traditional credit card companies, this lack of reporting creates phantom debt. Debt that is not officially recorded, but still impacts consumers' financial situations. This unreported debt makes it difficult for central bankers, financial traders, and economists to accurately assess the total debt burden on consumers and the associated risk. This is also an issue. It's almost like there's a shadow debt system where people, again, can just dig super deep holes that they have no idea how deep the hole actually is. We don't know, because technically speaking, if you've got a bunch of outstanding afterpays as an institution or as someone who will loan you money, I don't want to loan you money because you're in debt. Like, you can afford nothing. You're at zero negative. Point number 3, and the last and final point. The absence of clear data on buy now, pay later transactions adds complexity to the economic landscape, particularly in the post-pandemic economy. Economists like Wells Fargo's Tim Quinlan are concerned about the potential risk and implications of this growing trend. The phantom debt phenomenon complicates efforts to understand and manage economic trends as it remains unseen in traditional debt. They don't know where the economy is going at this point. At least not accurately. It's probably the reason that every time the Fed has to talk about inflation and our consumers slowing down spending, they don't really know. Because everybody's on Afterpay because they want stuff now. They don't want to pay for it. They think that they're gonna, like, if you're using it intelligently, that's one thing, and this is not for you. But for those of you who are using it to dig a deeper hole, that hole is going to be deep. Because once you kick over to where they can charge you, they are taxing you. It's worse than a credit card. It's basically a payday loan at that point. And people are using it more and more because more and more people are falling into that realm of they need to have the thing, and they don't want to be responsible for the thing. Like, if you're doing this and you're not on the same mindset that we have over here in the Wolf Pack, you are buying things that you legitimately can't afford. It's one thing to buy something you can afford, set the money aside and go, cool, I'm gonna pay for it out of whatever so that I can get more assets. Or there's a tool or a strategy or a reason behind it other than I'm broke, but I want this now anyway. it just doesn't, it's not going to bode well. It's not going to end well. I think this is potentially a hidden bubble that no one's taking into account that's growing because people are not willing to cut back to the quick, which is the necessities, what you absolutely need during times of financial hardship. They want to keep up appearances because they're focused on what everybody else thinks that don't care about them. They're trying to impress a bunch of people that don't even like them or care about them. And they're not willing to dial it back. Again, it's evolve or die over here. If you can't evolve in the system, don't complain about what you're not willing to do to move ahead. On the same note, we can acknowledge a mess was given to Gen Z. They're having problems. A lot of people are having problems right now, but it's a climate that we have to adapt to. That's the reason we're taking the necessary focus on getting rid of the debt early in the bull run this year. So we're making some moves. We're shifting over to where we're going to just have debt tools. We're not going to have debt. It's a debt tool. It's the reason we're testing out the velocity banking. We're using that to clear out all the debt as fast as possible with dollars that are coming in as income. So far, so good. As we move forward, we're going to make a couple of other strategic moves, and we're gonna keep it pushing. But that's what you have to do. There has to be a focus. It has to be intentional. There has to be a reason behind it. And we're going to close it out on that because we had a solid episode today just based off of the topics that we had. And, some of these episodes I don't have to put a bonus on because the bonus was the episode. But shout out to you guys. Shout out to the Wolf Pack. Definitely share this if it could bring value to anyone in your circles, because there's plenty of room in the Wolf Pack and we're not trying to get rich over here by ourselves. This content is for everybody. I'm documenting the journey, answering questions as they come up. And as we get into this bull run, we're gonna start doing some episodes that are just episodes that'll be focused on questions that I get asked in real life. And hopefully this brings value to multiple people because there's no such thing as a dumb question, only a dumb person. With that said, it's your boy Reckless Ray Dinero, and until next week, peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.